Chris, it is very good to see you. Today, we're going to talk through the 5 best times for a Roth conversion. Retirees who want to reduce their taxes in retirement can benefit from strategic conversions from traditional to Roth accounts. And identifying those key windows can lead to significant tax advantages and, of course, a bigger nest egg, which we all want. So, opportunity number 1 is during market downturns. Can you explain why a conversion makes more sense in a down market?
Sure. This year we could have said in the month of April when the
Yeah.
stock market had the significant sell-off, that
Yeah.
would have been a good time to convert some or all of an IRA account because the market value of those investments were down, and you could easily slide those exact same investments into a Roth IRA. And then as the recovery has happened since that time, you did it at a lower tax value or lower taxable event, and then now you recover on the tax-free side.
Yeah. All right. Very powerful. Opportunity number 2, ahead of tax bracket changes. And as we know, we've mentioned it many times, taxes are set to increase at the end of 2025.
Yep. And as a self-professed kind of tax geek for our clients, we know that the big, beautiful tax bill is in the middle of Congress. We don't know what's going to happen there, but
Right.
tax rates are set to increase at the end of this year if they don't get made more permanent or whatnot.
Yeah.
And, for the married couples out there right now, that married filing jointly is a big one because that's $96,950 to top out the 12% tax bracket. And then you add in your $30,000 standard deduction. So many people listening to this video, are in that 12% tax bracket and can convert dollars from forever taxed at 12% to never taxed. And that could be a good thing for your children. And, and just from the historical sense here, we can look at what has happened to tax rates over time. And, most recently, probably when Ronald Reagan got elected, and you looked at what happened when tax rates came down. And just the ultimate time right now is to, pay taxes at a lower rate versus a higher rate. So certainly some advantageous opportunities are right now, Erin.
Absolutely. We've talked about our nation's debt as well. So the country needs to make up that revenue somehow. Opportunity number 3 would be between retirement and RMD age when you may have lower taxable income.
Sure. Yeah. People retire from working, so they don't have the big salaries that they had, and they're living off their Social Security and maybe some other investment income. And once you hit the age of 73 right now, your required minimum distributions cannot be converted into a Roth IRA. So we typically say between age 59 and a half and age 73 is the ideal time that people will do Roth conversions because they can control their income better.
And on that note, another good opportunity would be if you are experiencing a low income year.
Yep, and a low income year can mean, hey, I retired and I don't need a lot of income right now, or you've retired and you're pulling money out of like a savings account, as many people do before they hit the age of 65, where Medicare kicks in. But if they're on the private insurance market, they might be living out of a savings account to keep income looking low on paper. And that's where that Roth conversion opportunity could come in as well. You could convert some money from an IRA into a Roth IRA while you're, manipulating your income as well to look poor on paper, we say, Erin.
I like that idea. All right. And last, if you are planning for your heirs, because Roth accounts are one of the best ways to create generational wealth.
Yeah, they certainly are. And, if grandma and grandpa or mom and dad are, retired and living out of their IRA accounts, just taking the required minimum distribution. And if they're in that 12% tax bracket and their children might be in the 37% tax bracket, it would make more sense for mom and dad to do the conversions, pass that money on to their kids, income tax free versus, keeping it in the traditional IRA and then passing it on to their kids in their higher income tax bracket. It's all about winning the game and not leading the game at halftime, as we all know.
Right. We don't want Uncle Sam to be our biggest beneficiary.
Amen to that.
Well, Chris, as you clearly demonstrated here, now is at least the time to crunch the numbers to see if a Roth conversion makes sense. So if somebody wants to sit down with you to do the math, what's the best way to reach you?
Yeah, I'd reach out to Heidi at the office and she'll get us set up for an appointment. And it's 866-695-2620. 866-695-2620, or reach out to us at McIntireRetirementServices.com.
Great. Chris, thank you.
My pleasure, Erin. Thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.